Good morning, dear students. I am Miss Vandana Pai. In today's lecture of the subject Global Finance, we will be discussing the point International Financial Environment. Okay, actually, from today onwards, we are starting the unit number 2nd, which is titled as International Financial Environment. Okay, so in this lecture, we will go through what is International Financial Environment, and we will also discuss the meaning, as well as the characteristics or the components of international financial environment. Okay, so let's start. What is international financial environment? See, prior to actually starting the international financial environment, okay, we will go through what is international finance, and then we will go through the environment of international finance. Okay, now what is international finance? International finance is the set of relations for the creation and using of funds needed for foreign economic activity of international companies and countries. Okay, see, international finance is a set of relations for the creation and using of funds which are needed for foreign economic activity of international companies and countries. Okay, so what is done into international finance? Yes, see, the funds which are needed for the foreign economic activity. Foreign economic activity means, okay, the transactions which you will be carrying in the foreign market. Okay, the funds whichever you need, or the assets whichever you need, okay, for successfully running the transaction, for successfully happening of the transactions in the foreign market. Okay, it is included in international finance. Okay, and what is then international financial environment? An international financial environment represents the circumstances. An international financial environment represents the circumstances for activity in the economy or in the financial market around the world. Okay, see, international financial environment, what does it includes? It includes, okay, the environment in which the financial markets or the activities in the economy, they are represented. Okay, see, into international financial environment, what is included? Yes, all the activities which are related to finance of the international market. Okay, see, whenever we think about international market or international business itself, okay, yes, we do need finance, right? We do need funds for successfully completing the international trade. Okay, so all these funds, finance, and all those things, is it, they are included in an environment. Okay, they are included in an environment. Okay, so whenever we consider financial markets, okay, or whenever we consider financial market which relate to the international market, okay, this all are included in the environment of international finance. Okay, so it can be influenced by something major such as credit worthiness of one's country's debts. Okay, see, when we consider international financial environment, okay, a country's credit worthiness can badly affect, it can badly affect the international financial environment. Okay, see, international financial environment is totally different from domestic financial environment. International financial management is subject to several forces. Okay, and even whenever we consider international finance, sometimes here international macroeconomics is the study of monetary interactions between two or more countries, focusing on areas such as foreign direct investment and currency exchange rates. Okay, see, whenever we consider international market transactions or international trade, okay, see, whenever we do export or whenever we do import, okay, see, we are required to deal with so many currencies, right? Okay, we are required to deal with the currencies in which you will be currencies of those countries with whom you are establishing the international trade. So how to have balance of trade, how to have balance of payment, okay, see, whenever we consider the exchange rate, okay, it is quite different, right? It is quite different, okay. For example, how our currency stands in respect to the currency in which, okay, or the currency of the country with whom we are dealing, okay. See, the difference in the amount, the difference in the exchange rate, it does affect this international financial environment, okay. See, the environment which has an impact on the international finance we will be studying here, okay. Means what is included in it? Yes, it includes the activities of the economies who are dealing with the international trade, okay. See, whenever it is international trade, whenever it is export and import, or other way, other structure, other forms or other methods of international business, okay, whenever a country deals with other country, a country deals with other country, okay, definitely the monetary transaction, it does has impact, it does has impact, okay, due to, or it can be affected due to the currency rate, okay, or the difference in the currency, or difference in the funds provided by the financial institute, okay. Because due to many of the reasons, the international finance can badly get affected, right? So there are certain internal forces and external forces. Usually the external forces, they do have impact on such type of international finance, okay. What are the external forces? Yes, the external forces may include the currency rate or the exchange rate, is it, may include the availability of funds through some of the institutes, is it, how much they are ready to provide you with the finance, is it, unless until you do have finance, okay, you can't switch over towards international trade, right? Okay, whether you are doing import or export, okay, for the basic transaction itself you are in need of some of the funds, right? Okay, if you are doing export, okay, it might be minimum. If you are doing import, it might be more, okay, because you are bringing technology into the home country, or you are purchasing the technology from other country, okay, or you are exporting something, some goods from your home country to another country, right? Okay, whenever these are the situations, at the time, okay, what you are required to do? Yes, you are required to be careful, right? So international financial environment, it does study, okay, the monetary interactions, okay, monetary interaction which happens between, okay, two or more countries whenever it comes to international trade or international business, okay. So it focuses on currency exchange rate as well as foreign direct investment, okay. See, we have in the last unit we have studied the different methods through which you can conduct international business, in which we have highlighted so many types, right? Okay, for example, um, export import, licensing, franchising, is it, then it was wholly owned subsidiaries, is it, holding companies, is it, then it was foreign direct investment, right? Okay, in which, okay, in all these forms, what you are supposed to do, you are supposed to interact with some another country, right? Okay, now in the same way, okay, when you interact with some another country, okay, and yes, whenever we think about other country, yes, with the change of the country, what differs is the currency, okay. And currency rate or the exchange rate of the currency, it is not equal all the time. It is not equal all the time. Okay, there is slight difference, or there might be variations into the exchange rates. Okay, so whenever we consider the exchange rates and all those things, okay, whenever we consider exchange rates and all those things, it does impact your international business and trade. Okay, you can be motivated towards international trade, as well as you might be demotivated towards international trade. Okay, these two things can happen. Okay, so it is quite needed to regulate this international finance. So it is required to study also the international finance environment. Okay, then see, international financial management is subject to several external forces like foreign exchange market, currency convertibility, international monetary system, balance of payment, and international financial markets. Okay, see, all these things, they do have impact on your international financial management, because okay, whenever you will be transacting with another country at the time, okay, you need to manage the funds. Is it might be you might have been assisted with limited funds. Okay, you might have assisted with limited funds. Okay, when it comes to limited funds, yes, you are required to manage these funds, right? Okay, and that too at international level, because if you are not able to if you are not able to settle such type of loans or assistance which you have taken from the financial institutes, okay, yes, you can or you are forced to wind up your business. Okay, this can happen. Okay, or it might make you to suffer from heavy losses. Okay, this can happen. So international financial environment, it includes all the factors which, yes, which can affect your international business, as well as the finance or funds which are involved in this international transactions. Okay, so let's see some of the components of international financial market. What are the different components which are regulating or which do have impact on international financial environment? Okay, let's see what are these factors. First one is foreign exchange market. Okay, foreign exchange market. What is foreign exchange market? Foreign exchange market is the market in which money denominated in one's currency is bought and sold with money denominated in another currency. Okay, means, okay, exchange of currencies. Okay, it literally means that it is exchange of currencies. Okay, getting it? Foreign exchange market. What is foreign exchange market? Foreign exchange market is such kind of market in which money is denominated in one currency, is bought and sold with money denominated in another country. For example, if you want to trade with another country, okay, see, what is our currency? Our currency is Indian rupee, right? Okay, for example, if you want to transact with any another country, okay, see, whenever we consider the currencies, for example, Japan, okay, the currency of Japan is yen, right? The currency of America, that is USA, is dollars, right? Okay, so if you want to transact with such countries, okay, see, if you think that there should be oneness or unity into the transaction, yes, either they should get their money converted into rupees, or you should get your money converted into dollars. Okay, or else the transaction will not smoothly happen. Okay, so we exchange whenever we exchange, for example, okay, if we agree to exchange something, or if we agree to import something from America, okay, if we are importing some of the machineries, okay, which we were requiring for our business, okay, what we did, yes, we had communicated with some of the with one of the businessmen from America. Okay, after due communication, after a good communication, yes, um, you finalize the date on which you will be transacting. Okay, for example, on 1st October, on 1st October you will be establishing a transaction. Okay, on 1st October you will be uh, uh, on 1st October 2020 you will be transacting with someone from America. Okay, now you are importing, right? You are importing something from America. Okay, if this is the transaction, if this is the transaction, okay, what you did, yes, you establish a good communication with that person. Okay, after that, okay, you agreed that you will be paying that person in US dollars. Okay, you will be transacting with that person in US dollars. Now, for example, your transaction cost for rupees 1 lakh. Okay, your transaction cost for rupees 1 lakh. Okay, you agreed to pay 1 lakh to that person, but that person, what he said, I said pay me in US dollars. Now what you will do? Yes, that person will not accept rupees. Okay, now you are supposed to get those rupees converted into US dollars. Okay, adequate US dollars. Okay, so this transaction, whenever it will happen, okay, it will be called as foreign exchange transaction, or the market in which this transaction will happen, it will be called as foreign exchange market. The foreign exchange market consists of two tiers: the interbank market or wholesale market, and the retail market or the client market. Okay, see, the foreign exchange market is classified into two parts. First part is wholesale market, second part is retail market. Okay, the another name given to wholesale market is interbank market, and the another name given to retail market is client market. Okay, the participants in the wholesale market are commercial banks, investment banks, corporation and central banks, and brokers who trade on their own account. Okay, who are the people, who are the participants who are included in the wholesale market? Yes, the commercial bank, investment bank, okay, corporations and central banks, and the brokers who trade on their account. Okay, so whenever it comes to foreign exchange market, okay, it is an counter market, because there is no single physical or electronic marketplace or an organized exchange with a central trade clearing mechanism where traders meet and exchange currencies. Okay, it spans the globe with prices moving and currencies trading somewhere every hour of every business day. World's major trading starts each morning, and okay, each morning in Sydney and Tokyo, and ends up in San Francisco and Los Angeles. The foreign exchange market, okay, comprises of, yes, as we have already said, wholesale market and retail market. Okay, the other part in retail market, who are included? Yes, travelers, tourists who exchange one currency for another in the form of currency note or traveler checks. Okay, so then second component which is included in in international financial market, it is currency convertibility. See, foreign exchange market assumes that currencies of various countries are freely convertible into other countries currencies, but this assumption is not true, because many countries restrict the residents and non-residents to convert the local currency into foreign currency, which makes international business more difficult. Okay, many international business firms use counter trade practices to overcome the problem that arises due to currency convertibility restrictions. So, there are certain norms which are prescribed to convert the currencies. Okay, for example, in the previous transaction which we have gone through, okay, the person from India was trading with a person from America, right? Okay, means see, many of the time what happens, okay, the two countries, okay, whenever they are exchanging, any two countries or any two traders from different countries, they are exchanging, at the time the another country might restrict this transaction, okay, might restrict the convertibility of such type of currencies. Okay, so many of the international business firm, what they do is they use counter trade practices to overcome the problem that arises due to currency convertibility restrictions. Okay, if easily the currencies can be can't be converted, then surely it can be a major problem into the international financial environment. Okay, then international monetary system. Okay, any country needs to have its own monetary system and an authority to maintain order in the system and facilitate trade and investment. India has its own monetary policy and the Reserve Bank of India administers it. Okay, the same is the case with world. It needs a monetary system to promote trade and investment across the countries. Okay, international monetary system exists since 1944. The International Monetary Fund and the World Bank have been maintaining order in the international monetary system and general economic development respectively. Okay, see, whenever we consider the monetary system of any country, okay, why monetary system is made? The monetary system is made to maintain order in the system and facilitate trade and investment. Okay, so to have smoothness into the trade, to have smoothness into the transaction, usually, okay, such type of policies they are framed, okay, so that we ensure smoothness in the international transactions. Okay, see, international monetary system exists since 1944. Okay, keep this in mind. International financial, next component is international financial markets. Okay, what are the international financial market? Yes, international financial market are born in mid 50s and gradually have grown in size and scope. International financial market comprises of international banks, okay, eco currency market, euro bond market, and international stock market. International banks play a crucial role in financing international business, acting as both commercial banks and investment banks. Okay, most international banking is undertaken through reciprocal correspondent relationship between banks located in different countries. But nowadays, large banks have internationalized their operations. They have their own overseas operations so as to improve their ability to compete internationally. Okay, see, international financial markets, they comprises of euro market, international banks, euro bond market, and international stock market. Okay, and euro currency market originally were called as euro dollar market, which helps to deposit surplus cash efficiently and conveniently, and it also helps to raise short term bank loans to finance corporate working capital needs, including imports and exports. Okay, Eurobond market helps to MNCs to raise long-term debts by issuing bonds. Okay, international bonds are typically classified as either foreign bonds or euro bonds. Okay, a foreign bond is issued by a borrower foreign to the country, okay, where the bond is placed. Okay, on the other hand, euro bonds are sold in countries other than the country represented by the currency denominating them. Okay, see, in international financial market, yes, the participants are, who are the participants? The international banks, euro currency markets, euro bond market. Okay, what they do? Yes, they do finance the international business. Okay, all these um, is it all these institutes, they do, yes, finance the international businesses. Okay, why? Yes, to have smoothness into international trade or international transactions. Okay, then another component is balance of payments. Okay, yes, oftenly we have heard this, right? Balance of payment. What is balance of payment? Yes, international trade and other international transactions result in a flow of funds between countries. All transactions related to flow of goods, services and funds across the national boundaries are recorded in the balance of payment of the countries concerned. Okay, balance of payment, what is it? It is a systematic statement that systematically summarizes for a specific period of time the monetary transactions of an economy with the rest of the world. Okay, in simple words, the balance of payment of a country is a systematic record of all the transactions between the residents of the country and rest of the world. Okay, the balance of payment includes both visible and invisible transactions. It presents a classified record of it. Okay, means all the receipts on account of goods exported, services rendered, and capital received by the residents, and payments made by them on account of goods imported and services received from the capital transferred to non-residents or foreigners. Okay, means it includes receipts as well as payments. Okay, receipts by the residents for the goods exported. Okay, and the payments on account of such type of goods which are imported and all. Okay, so it is a summarized and systematic record of all the transactions which happens across the world. Okay, thus the transaction include the import and export, okay, by individual firms and government agencies of goods and services, income flows, capital flows, and gifts and similar one-sided transfer of payments. A rule of thumb that aids in understanding the balance of payment is to follow the cash flow. Okay, balance of payment for a country is a sum of current account, capital account, and change in official reserves. Okay, see, whenever we consider balance of payment, yes, what it does, it includes all the receipts, okay, or the incomes, okay, as well as all the expenditures, that is all the expenditures made by the country, okay, or the residents or the government or some of the financial institutes who are located in that country. Okay, so these are the few components of international financial environment. Okay, so with this we do conclude today's lecture. Thank you.